What's up traders, welcome to Failure to Displace. I am back after a couple of days vacation and we're going to take a quick look at this morning's London session on EURUSD. Today is the 25th of July 2023. So we're going to start our analysis on our 15-minute time frame as always using our Liquidity Tracker Indicator. The link for that will be down in the description below. The Liquidity Tracker is essentially showing us liquidity at session highs and lows. So the green line shows us untapped liquidity, and when liquidity gets taken, the lines turn red to show us that that has been swept. So we can see coming into London this morning, we've got both Asia high and Asia low still intact. We do have the New York PM session high from yesterday available to us, along with New York high yesterday as well. Tightly packed liquidity both above us and having the PM session was just swept this morning by the Asia, but it's basically created relative equal lows. So we've got two really solid areas both above and below. Going into this, we're going to be looking for the 2022 mentorship model entry, which means a sweep of liquidity from either the session high or low, high here, low here, and then a break of structure with displacement, looking for an entry to trade to the opposite side of the range. Let's drop onto the 1 minute time frame and see what happens. So right now we're in the middle of the range, which means we don't want to be trying to get into trades here. We want to be trading at the extremes, which is either the session highs or the session lows. We'll start scrolling through price action now. And essentially we're just being patient here, making sure we're not going to get chopped up inside the range. So you can just see there we've tapped Asia high. So our line has gone from green to red. So we've taken the Asia high. We can mark this as a failure to displace. Our break of structure currently is this low here. So we need price to be taking out this low with displacement in order to give us an indication that we may get a reversal. So let's just watch as price continues. So I have put in a new swing low here. So we will just track the swing lows with this line. See if we can break this with displacement, and we're still pulling higher, so our next swing low is just a little bit higher there. So what's identifying a swing low for us is we have a higher candle to the left and a higher candle to the right. The one in the middle is our low point there. Okay, so let's now continue. We've taken out now the New York PM session high, leaving our new swing low at this point. We've taken that with displacement. So this is good to see. We've had an aggressive move up. Hopefully we can get an aggressive move back down into the range now. Let's remove this red line because we already know we've swept some liquidity. Okay, so aggressive move up, aggressive move back down. This is a really good indication of a failure to displace. However, we haven't broken structure yet. So there's no entries at this point. We need a body close below this level, leaving displacement. So we do have a fair value gap and a strong bearish candle here. Let's see if this leaves us another fair value gap. It does leave us a fair value gap. So this would be classed as a displacement candle in my book. However, we have not broken structure. So I need a body close below this level. So coming back into that fair value gap, what I like to do is monitor the 50% of the fair value gaps to see how they get respected. If the 50% gets respected, it's usually a good indication that this is a strong fair value gap. So we can see this candle has just pulled up to the 50%. Holding the 50% and rejecting away from it, so that's good. And there we can see a strong close, break of structure there. So that is sufficient for me. So on the 2022 mentorship, we want to be entering in a discount of this retracement leg now. So we've broken structure, so we will be looking 50% is exactly on the 50% of this fair value gap. So if we do come back to that level, I would take that as a short position with a stop loss above the high. And ultimately, because we have swept the Asia high and the New York PM sessions high, I'll be looking to target this as my ultimate take profit, which will be taking out the current daily low. Let's see what happens here. So price has continued lower, so we're going to continue with our fib following price down. So now our discount premium level has changed. 50% is at the bottom of this fair value gap. So we would enter at the bottom of the fair value gap, stop loss above the high. We've pulled down a little bit lower and we are now pulling back into the range. So again, our 50% is here. So you've got two options here. We could be entering at the 50%, which is just into a discount. But what's really interesting to me is now the optimal trade entry is at 50% of this fair value gap. So it really depends how greedy you want to be. I'd be quite happy to take an entry at 50%. I mean, it's only a 3.9 pip stop loss. So we've still got a very, very tight stop here. And we've got a potential of over 6R, aiming to take out the session lows. So I will go with 50%, but optimal trade entry also would be a valid point because it is exactly on the 50% level of that fair value gap. So coming up to the end of the hour now. So we would hope to see coming into, which will be silver bullet hour at 3 AM. Hopefully we get some volume coming in. Let's see if we get tagged in here. So we're currently respecting this lower fair value gap. No entry off this. As far as 2022 model goes, we want to be entering in a discount of this leg where the structure was broken. So this is our leg. This is the break of structure. We want to be entering in this area here. So we're ignoring this lower fair value gap. And there we go. So we've got a strong move. We've just been tapped. We've just tapped that fair value gap. Price has come up, respecting the 50%. So optimal trade entry has been hit if you were going to hold the optimal trade entry. Again, we just closed through that fair value gap. We do have a fair value gap above us as well. And we do have this order block in the middle here, this bullish candle, which could potentially be holding price down. Brilliant. So just coming into the open of the new hour, so 2:58 before the new hour opens, massive displacement candle, bearish, breaking structure. So that's fantastic. So we are in the trade now, really strong reaction. Ultimately aiming for the opposite side of the range to be taken. So we've taken Asia high. We expect Asia low to be taken now based on the 2022 mentorship. Price is pulling away nicely. So we've swept the current session low. This would be a good take profit. So I would probably be taking at least 50% of the trade off at this point, possibly even more. Leave the stop loss where it is because often I see, especially in the silver bullet hour when volume's coming in, you may see a retracement back towards your entry. So try not to go to break even too early. Just take stuff off the table, take something off the table, leave the stop loss where it is. So we can now see a price aggressive move back. Let's have a look at this where we're pulled back to on the fib. So we're back to optimal trade entry here, just about to hit our entry. So you can see from this high to this swing low, we've pulled back and we are now tapping optimal trade entry. So this could be a second entry if you didn't get in on this first one. We've got this really nice fair value gap here that we're just closing into at optimal trade entry. It's respecting the fair value gap, so a good indication that this is going to hold. Still in this big fair value gap around optimal trade entry. Ooh, just closing up. Again, strong reaction. This strong reaction is coming in at the start of the new half hour candle. It's a bit of Stacey Burke theory here. Look at the 15-minute cycles. Price has pulled back. We're going to open the new half an hour. We've got a strong engulfing candle here. leaving displacement again, fair value gap. This is why you don't want to be adjusting your stop loss too early. You would have been out of this trade. I mean, you could have closed out in full at this point, no problem, and you would have had 3-hour trade, more or less. So that's, you know, nothing to kill your nose up. However, if you'd taken some off, left your stop loss in place, you could have a nice runner, because we would expect the other side of the range to get taken. So we're still in profit. See how long you want to hold this trade. Oh, really strong impulsive move at the end of the hour. Take out the low, so there is our target hit, giving us our 6-hour essentially trade. So that is the London session from this morning, using the 2022 model to get our entry. A couple of good entry points there, either based on this first pullback into the fair value gap after the first break of structure, or indeed waiting a little bit longer for a larger time frame pullback again into an optimal trade entry, price pulling away again on there. The thesis being the buy side liquidity had been taken, therefore we would be looking for some kind of session liquidity on the sell side to be taken, which ultimately was our Asia low from earlier on this morning. So I hope you found that useful. Please leave a thumbs up if you did enjoy the video. If you've got any questions, please leave them in the comment section down below. Be happy to try and help you out where possible. And if you'd like to see more analysis like this, going through ICT concepts and such like, then please consider subscribing. I'm trying to drop videos daily. Thanks very much for watching, and I'll see you in the next video.